with that, may I request Mr. Anklesaria to be with us on stage to take us through his presentation on the conference theme, Innovative Technologies to Deliver Seamless Banking Services to the Banked and the Unbanked. Ladies and gentlemen, we're running a little behind schedule and we'll try to rush it up. We request all of you to be with us through this presentation. Post this, we're going to break for lunch.
Thank you, and once again a very warm welcome, ladies and gentlemen. I'll try to make this as quick as possible. I think the book has already been shared with a lot of people, so you can have a lot of reading. But just like to take you through some of the very key points about the entire conference theme out there and what we call as Bank 3.0 as we term it as. So can we have the presentation on the screen, please? Thank you. I think when we talk about reorientation or change or revamping of things, the most important thing is to understand the context from where things are coming from. I think just to put a few statistics onto why banks really need to move on the innovation path. I think the numbers speak from themselves from wherever we are from 2013 to 2014. And if we look at the statistics which are there for 2012, we've seen a sharp decline in some of the most key parameters that the banking industry is facing today, more prominently so in the public sector banking space, because that really covers 76% of the banking economy. So really all the statistics would be skewed towards that thing. But I think the most important thing is that on all important parameters like return on assets, return on equity and NIM, we've seen a sharp decline, including net profitability of banks. So really the lower performance indicators out here really pose a question to us, okay, are we doing business the right way? What are the things that we need to change in our business to get more efficiencies into the entire thing and improve the performance indicators of that? So that's basically where the idea about innovation, idea about thinking about differentiated offerings, etc., all comes into the play. I think some of the qualitative trends that are really forcing banks to think about innovation, I think most important thing is about how do we bring in efficiencies into business? How do we bring in something more towards customer centricity? I think banks are today looking at competing in the same market. I think all of the banks competing for the same share of wallet, the same people. So why would anybody move from bank A to bank B? The real question is that if I have to work in the same pool, then what is it that I will offer different compared to any of my competitors which will enable a person to be attracted towards me or move a person from one bank to another? The third largest push which is coming in is the entire regulatory push which is going on since a long time. We moved on from Basel II to Basel III. We are really talking about infrastructure, large infrastructure projects being actually stuck up because banks are not being able to provide finance because the capital is basically locked out there. So unless there is an improvement in government policies and all of that, there is huge amount of capital locked into infrastructure projects. And without infrastructure actually booming or growing on a steady pace, there is no way in which the economy can see growth out there. So it's a vicious cycle that banks have really been pushed into. So one side they're stuck with capital, the second side they have alarming volumes of NPAs that are there, and the third side is if they don't lend, then the country can't move forward. So I think it's not such a very good position to be in, but I think this is what is really forcing both the government and the banks and a lot of people in and around to think about innovation and how they can differentiate themselves from the other. I think the most important things that are really driving or going to drive, service delivery here, which we are talking about in terms is technology. I think that's going to be a clear differentiator between banks to be able to offer services to a large pool of customers. Second is offer those services at costs which are absorbable by the industry, and also make it easier for people to operate and come onto banking platforms. Today a lot of banks, a lot of institutions are really looking at their entire channel business, so forth. Earlier, banks had very cumbersome processes on internet banking. Customers used to feel that, they are completely lost in either trying to open an account or trying to renew FDs, etc. A lot of banks are now looking at alternate channels as to how we can simplify things, because a lot of banks have put in the best kind of infrastructure, technology infrastructure. Today, our public sector banks operate on the same infrastructure that an ICICI bank would operate. But still, the adoption of technology from a public sector bank is fairly low as when we compare it to a private bank. Why is that so? I think a lot of banks are really asking themselves these questions, and most of the times it's been observed that the processes are too cumbersome and long. So you're really so you have the best technology that is put in, so you are comparable to an MNC bank or to a private bank. But I think the adoption and usage of the technology is a big challenge as far as public sector banks are concerned. So I think driving that is one of the largest areas out there. Second is that, do we really understand customer preferences? Going forward, at least what we believe is that banking is going to be being able to understand your customer and being able to provide customized solutions as to what the customer actually wants, rather than pushing services down to the customer. The concept of having the public savings account and the staff savings account and all that is no longer going to be prevalent. It's going to be very customized offerings, either for corporates, for salaried corporates, or for individuals whom the banks want to attract and retain. Because as I rightly mentioned to you some time back, is that if you're unable to differentiate yourself with a customer, then you don't fairly have a customer. Whatever you have today also will, over the period of time, start declining. So it will show a steady decline if you're not able to innovate. And the other thing is, heightened competition with new banks coming in. Though we have two, the government is talking about now opening up the doors for even more. And we have concepts like small banks, payment banks, and all that really coming in. So there is going to be increased competition from old private sector banks, new private sector banks, and the so-called new banks, which are really coming in, and all of them fighting for the same customer. The person who's next door to me is now confused as to where he should be really going. So I think the advent of disruptive technology, the advent of being able to understand customer needs and be able to be responding to that, the quicker you're able to respond, the faster you're able to get the customer converted to your bank. So I think these would be the realities of life going forward. It's no longer going to be banking services, but it's going to be completely offering services to a customer on a bank what he needs. I think, where does the banking landscape change, and what do we think about Bank 3.0? Traditionally, we started with a brick and mortar bank to be offering traditional deposit advances services. Then we moved on to solutions which are targeted to increase more operational efficiencies. We got in core banking and we got in internet banking, and we said that now a customer can go to any branch and do any bank kind of banking, and we sent up centralized processing centers, and we focused really on efficiency. That can technology drive a lot of efficiencies out there? The last and final shift is now what we are going to see is how are we using technology and the infrastructure that we have created around it to be able to understand our customers better. And second is be proactive in providing services to customers, what they need and when they need it on demand. So it's going to be migrating from a so-called traditional approach to a service-based approach. It's same like what we saw our charges, fees and charges in income, all that some years back. Erstwhile, there used to be a flat fee based on DDs and all of that. Today, banks are really talking about, I will charge you as I'm able to serve you. If I'm able to serve you in 5 minutes, you pay X. If I'm able to serve you in 2 minutes, you pay X minus something. And that's how they're able to charge a premium onto services. So what we are seeing is that even technology or even banking is going to change in terms of the customer service that they're going to offer and how they're able to distinguish that. I think, according to us, the pillars, the so-called pillars of banking would be very simple. How you are able to offer superior customer service. One is really talking about omni-channel banking, that customers really not bothered through what channel he is going to come on through. He wants the same kind of experience from wherever he goes through. Whether he comes in through an internet, whether he comes in through a call center, he expects you to know why he is coming there, and he expects you to respond to him very effectively. So omni-channel banking is something that's really catching a lot of trend as we are seeing in the market. The entire game of financial inclusion and rural banking is where the technology adoption of mobile and all that is going to be very extensive out there. And if we are not able to change the paradigm of how we are operating out there, this business would become a very, very costly affair for banks, because unless there is balance which is kept in the account, and unless there are real transactions that are happening. I'm not talking about the so-called transactions which BCs do where money is taken from the customer, again given back, the same money is rotated 10 times. That's not what. So until there is real transactions which are happening, and you are able to service customers through low-cost models out there, this game becomes very, very difficult. The other most important thing what we feel that banks should be setting up is a center for innovation. There is a very, very heavy need, especially in the public sector environment, to innovate things. Mainly public sector banks have been followers. You have a certain number of banks who set the standard and the others start following that. It's really not customized to the size, scale and fitment of that particular bank. So I think there is a lots and lots of learnings which bank need to do and come up with products and services which are tuned to themselves and not being followers of that thing. So it's very, very important now for banks to really look at setting up these innovation hubs within their organizations to clearly strategize and plan of what is best required for the bank themselves rather than start following others. Because what is best suited for a state bank might not be the best for another bank. So there is no sense in really adopting that as a follower. And last but not the least is a lot of people believe that, payments is going to be the largest other source of revenue income for them. So the largest source of fee-based income now going forward, as we all know, we have literally stopped and dried all the sources coming in through DDs, etc. and all that, RTGS, NEFTs, electronic payments taking over the complete fee-based income space. So unless we are able to have a very effective mechanism about knowing where the customer payments are going, knowing what are the originations of payments, etc., and actually having a foot into the complete payments ecosystem, there will be a challenge on banks to really focus on fee-based income, because the only place where fee-based income is going to come is through payments. So really focusing on creating a centralized kind of a situation where payments are getting consolidated, reconciled, and you're able to track and monitor payments of system, because that also gives you an insight onto the customer behavior and spendings that are there. So I think I've just been shown that I have 5 minutes out there. So I think the important thing is that I would like to really go on to the one other slide which I want to talk about is digital. I think there has been a lot of talk around digitization. So let me clarify that according to us, digital and digitization are two different things. Digitization is mainly converting the processes that you have today onto some kind of a platform. Digital is basically transforming or looking at a way of changing the way you're going to work. So these are completely many a times these terms are used very commonly. Digital and digitization mean the same thing, but ideally they don't mean the same thing. One is really talking at a strategic level, the other is talking at an operational level. Going forward, to reduce operations and to make things seamless, there will be no choice left to banks but to adopt digitization and digital. Today banks are really talking about looking at branches which make less than 2% or 3% increment on year to year and shut them down. Replace them by branchless banking, because it doesn't make sense for them to incur those costs. So that's when we are talking about digital. And there is a very heavy thrust on by the government also from a digital India perspective and all of that, which will put digital into a new wave of banking. So, a lot of bankers, a lot of CTOs in the banks really thinking about what are the processes that can be digitized, how do we move in the digital strategy. But the important thing is that it has to be very, very linked back to your entire business strategy. Otherwise, you cannot adopt digital solely by just trying to automate processes. It will not work out there. I think from a conclusion perspective, 3 or 4 very important things. Omni-channel based experience in banking to be a reality of life. It's not that we are talking about something, it's really happening today and customers are really demanding that. Second most important thing, to be able to leverage on analytics. Public sector banks have mines of data. Are they able to leverage that data to service or do anything to their customers? I think the answer has been no. Truthfully, if we were to ask ourselves, really no. So how do we leverage that important asset that we have to be able to better our things, whether it be profitability, whether it be understanding customers better, or whether it be used for risk management itself. Today, the largest, when we were discussing, I think, according to me, the largest problem why banks are facing these problems about NPAs and all that is not being able to share information with each other. Probably if we were to share borrower information or that information is easily available to a lot of banks, we could have avoided a lot of situations coming through. The other point is really setting up and thinking about building an innovation hub for banks. They need to continuously innovate and have things tailored to their requirements and not being followers. So I think it's a very important point that I want to stress about, is that whether it be technology, whether it be business strategies, it should be adopted for the bank and not generalized following the bank. Then definitely looking at financial inclusion, public sector banks have the social responsibility of financial inclusion, but the key to that is improving operational efficiencies with low-cost means of doing transactions. So what's best suited for me out there, that's something. I think what we really want to portray is that the next generation bank will be a paradigm shift towards customer behavior and technology innovations together. It can't be, if you're not going to be able to be responsive to customer needs, whatever technology you put behind yourself, that's really not going to work, and customers will move away from one bank to another. I think just some sayings which I would like to leave you with, So this is just for you to read. I think the important thing is that chance favors only them who are prepared. So I think it's time for us to really think about where we want to head to and be prepared for the coming times. I think there is a lot of things that the government, that the initiatives are being taken, and unless we are prepared for grappling the situation out there, we will just be left behind and the others will take forward. And there is no way that we will be able to blame a private bank or an MNC bank or anything, because I think on a technology standpoint, I believe that even public sector banks are at par in terms of technology adoption. How you're able to use that and how you're able to leverage that, that's something that needs to be really thought about. Thank you very much once again for your patient hearing. Wish you a